I'm Matt Bishop with REIT.com, and I'm here in San Diego for REIT World 2012, NAREIT's annual convention for all things REIT. I'm joined by Jeff Horowitz, the global head of real estate, gaming, and lodging with Bank of America Merrill Lynch. So I want to start by talking about all these REIT deals that we've seen taking place, and a lot of them have been in the healthcare space. Why is that?
I think you have to remember when you talk about healthcare that it's a particularly large sector. So first of all, the companies are diversified, both by their property type and their geography. And when we talk about healthcare, we're talking about medical office buildings, we're talking about senior housing, we're talking about skilled nursing, so a very, very large sector. The second factor I think is important is that this is a space that has performed very well throughout the cycle. So the companies had very strong balance sheets, they paid their dividends, and their stock prices went up. That's all a great backdrop to have a successful acquisition story. Third, there's actually been deals to do. So there were one-off transactions, there were private portfolios, and unlike in many other spaces, you find that when healthcare companies often buy a company, the original company may continue to manage the portfolio. So it's different than in other spaces where the management team may go away. And lastly, I'd say that this is a space where we have some very strong CEOs who had conviction and confidence in their vision in terms of growth, in terms of when to really push on the accelerator in this marketplace, and their stocks have been rewarded, and hence they've repeated the cycle and done many acquisitions again and again.
Which side of the capital markets seem most appealing to REITs as they search for fresh capital?
You know, this has been a very terrific year. 2012 was a year of record issuance in almost every product type. So in equities, over $20 billion, preferreds, $8.5+ billion, investment grade market, CMBS market, bank market. So I think you get the picture, very broad and open. So really the question that I ask to CEOs, in this marketplace, I say, how do you want to fine-tune your capital structure? Because we could do many different types of things. And in this market, what you'll find is that depending on the management team's bent in terms of how they look at that, they'll start to access various marketplaces.
And have you been surprised at all by the relatively small activity we've seen in the IPO pipeline?
Not really. You know, I've been saying for a number of years that we're not going to see a return to the mid-90s where 20 or 30 companies go public per year. We're going to see a more mature marketplace that we work within where we may see a handful of companies each year depending on the moment. So things may be topical, like single-family housing today. There may be some large portfolios of companies that went private that may go public again. But I don't think you're going to see this great wave that you've seen before. Companies need to be differentiated. They need to have a very strong management team, and they have to be priced right. And those ingredients require a number of factors to occur, and hence only a handful of deals per year. I do think that when you look forward, you're going to see this continuation, though, of large-scale, high-quality companies coming back to the markets just because so many went private in the 05 to 07 time period.
Jeff, thank you so much for your insights.
My pleasure. Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.